She is a financial planner and advisor.
He's the founder and president of Zinnia Wealth Management. He's also a popular radio show host.
There's a way to have the money in the market and have protected growth.
This holistic approach will help people get to and through retirement.
Absolutely.
You have to change the way that you think. It's not about having these double-digit returns anymore. Things are changing, and you have to have an advisor that's keeping up with the changes.
Your outcome is going to become very desirable if you have some sort of coach helping you along the way.
And our next recipient for the Media and Communications XP, Charisse
Rivers.
Do not have to risk all your money in the market to survive, because it's about the retirement dream.
Hello, and welcome back to Retirement Coffee Talk, home of Zinnia Wealth Management, our weekly Facebook Live every Wednesday at 3:30. I'm your host, Charisse Rivers, and my goal is to educate you, inspire you, and get you to retirement and beyond. Let me give you a quick pregame. We're going to talk a little bit about the stock market. We're going to talk about what's happening in Central Florida, and then we have our trivia questions, which we have lots of money. We're ready to start shipping out, and we'll announce any of our winners if we had any last week. And then we're going to go into Zinnia U, where I educate you. Today, we're talking about all different types of real estate investments, from REITs, private and public, and Delaware Statutory trusts, opportunity zones, flipping a home and or renting a home, in different ways, and why you might want to do one versus the other, give you some pros and cons. So let's get this party started. Holy moly macaroni. Is anybody watching the stock market? I did not know this morning when I woke up the Dow Jones by the end of the day was going to be up another 400 points. This stock market is off the charts, and it's quite interesting because we have some massive technology stocks that are just zooming up the pipeline. And like I said, the S&P 500's hit an all-time high already a couple of times this year since March. NASDAQ's hit an all-time high 11 times this year since March. And then Dow Jones, we're only 500 points away from hitting the all-time high from the bottom before we hit COVID. So again, things are looking up. Elections on the horizon. People are just wondering, how long could this last? How good could it be? Is it going to start correcting or have a bobble soon? And here's the thing. I don't have a crystal ball. I don't know, but I will tell you this. The Dow Jones and S&P 500, you know, the big six companies are drawing those indexes up. So if you have Tesla and Apple and Zoom and Google and Amazon, yeah, those stocks individually, your accounts are killer. But those are what's pulling up the S&P 500. But that doesn't mean every stock in the S&P 500 is growing, because they're not. So lots of things to think about. Just remember, for the short term, if you're getting ready for retirement or in retirement, make sure you're not pulling any dollars out of the accounts that have gone down. That's the big no-no. We call that a cardinal sin. Now, I want to talk about three stocks, which are really, really interesting right now. Has anybody heard of Zoom? If you have not heard of Zoom, I'd be very shocked. So Zoom was a platform that's been around for a while, but it really launched when COVID started because everybody had to work from home, right? And we were all doing video conferences. I was working from my own home and, you know, meeting with clients online, and it was this new life we all embarked in. I called it the new world, but things are going back to normal. But Zoom was, you know, $100 back in April. And I was telling my clients who had, you know, some Roth IRAs to say, hey, listen, let's maybe buy some into Zoom, because I think moving forward, this is going to be a really good stock in the technology sector. So a lot of us bought it around $100, $125, and I don't recommend it for everybody. And remember, these are people I know very well and I've already sat down with. And basically, do you know what it went to yesterday? It went to $450 yesterday. I didn't know my $100 pick was going to go to $450. So those clients are very happy. And I know there's some of you watching today that said, no, Charisse, we don't believe in Zoom. We don't want it. And you're probably like, kicking yourselves. But so here's the moral of the story. Trust your advisor. If you pick an advisor and you put everything in writing and you have direction, I would say knowledge is power. You're going to have confidence. Sometimes it's good to trust your financial advisors, especially if they're forward thinking when we have times like this. But I'm also going to put this disclosure out there. Zoom, along with a lot of other stocks, are very volatile. What I mean by that, Zoom went from, let's see, $475 yesterday. Actually, today, all the way to $428. So it took loss. So it was at 475 and then went to 428. Remember, there's a lot of volatility. Don't go out and buy Zoom if you can't afford loss. And don't go out and buy Zoom if it has a $50 loss like that you're going to go sell it, because that'd be the worst thing you ever did, right? Same thing with Tesla and Apple. Okay, everyone, Tesla and Apple officially split on Monday. So now you can go buy Tesla for $450 instead of $2,200. You can go buy Apple for $130 instead of $500. So cool thing is people can actually afford some of these stocks now. But I've got to tell you, there is so much volatility. I mean, these are the most volatile stocks. Apple went from $134 today all the way down to $127, back up to $131. So it's volatile. So be prepared. Remember, if you have a portfolio that has a buy and hold bucket, and then you have an active managed bucket, that's something I do for my clients. And then you have like this safe bucket. Say you have 3 buckets. That buy and hold bucket, you buy and hold for a reason. Okay. So, and if you can't hold it because you're scared, you shouldn't have that bucket. Let's look at Tesla. Tesla went all the way up to $479 today, went down all the way to 408. I'm sorry, 405. So that would have been a perfect time if you had timed it in those instant seconds of the stock market around 11 o'clock today. Remember, if you're young, you can probably handle this volatility, but we're in that 5 years before retirement, that retirement red zone. Be very careful because we get emotional. We're in a different season of life, and it's about not accumulation anymore. It's about preservation. And sometimes we make really bad moves when we get emotional and things start bobbling. So make sure you have a plan. Make sure you know the direction of your plan, what your exit strategy is, get it on paper. And I promise if you do it like that and you're meeting with your advisors at least once a year, you're going to have confidence and you're not going to worry about the bobble if you happen to have an account like that. So I'm done with the stock market, but I do want to tell you something that I found out today. It was quite interesting. Banks. Has anybody ever been in a bank? Give me a thumbs up or a like if you've been to a bank and you got one of those lollipops for you or your kids, right? So do you know what those lollipops are called? They're called suckers, right? And so they hand you the lollipop and they're basically calling you a sucker, right? So here's the deal. Banks during second quarter during COVID, this is so disappointing, made $11 billion in NSF fees and overdraft fees. And the average overdraft fee, somebody would go over like $29. And the government and Congress and the Fed said, hey, they didn't put a stipulation in there, but we highly recommend that you waive these fees. Some banks did waive them, some did not, but that's a lot of money. And so banks, they can be very costly. There's a reason why they're around. So I recommend that if you were that person that had an NSF fee, or if you have overdraft fee, call your bank, because I did hear that they are being very kind now and that all this public news is out, and they will give you your money back. I doubt all of them will, but if that was you and you're in that situation, you had an accident, through this virus, call your banks. Take charge and see if they'll give you that money back, because every dollar counts in my book. You all know that. So the reason why the stock market's still going up is positivity on vaccines. We have another company out there that's working on a stage 2 of the COVID vaccine, and then there's stimulus talks. I mean, Pelosi was on the phone with one of her friends last night talking about, hey, maybe we need to start planning before Labor Day. So we'll see what happens there. Oh, and by the way, happy Labor Day weekend. Be safe. Okay, eat lots, and I hope you enjoy your family. Okay, I'm going to put that down. We're going to move forward. Okay, let's talk about Trump news. So here's the deal. I love Trump. I can't understand why he's so orange, though. You think he could afford a really good spray artist? Because I've been sprayed once with a balloon, and I don't look that orange. Just, give me a thumbs up or down what you think about that, but it drives me crazy. I don't know how he doesn't get it on the white shirt. Anyways, let's talk about what he says. He says, we will continue to reduce taxes and regulations at levels not seen before. That's a shocker. How can we keep doing that while we're printing money and lower your taxes? So the Tax Cuts and Jobs Act of 2017, basically they expire in 2025, but somehow he is still going to lower taxes. I don't know what world he lives in. He must be a magician and not a mathematician. That's all I've got to say. So if he somehow manages this, somebody's going to pay down the road, and it is, by golly, going to be our baby boomers and people retiring. So just know what goes around comes around, because the comptroller of the United States during the Bush administration, Clinton administration, David Walker. I met him, and back then he says, we are in huge trouble with debt and taxes. Even back then, he said we're going to have an issue. And now fast forward, we're trillions of dollars into debt. I don't know how he's going to do it, but I know we're all going to hope he figures it out. But again, remember, one day somebody's got to pay the piper. So if you want to start working on tax maximization strategies for later, that's when you come in and see us or schedule a conference call, because it's going to be more important now than ever to start planning, especially before taxes expire. Okay. Governor DeSantis, he talked to airlines in South Florida this week, and he is telling everybody it is time to fly. Get on the planes and fly. Between May and June, we had 8.8 million people traveling to Florida. That is down 24 million from the year prior. So he's like, you know, the airplane isn't a vector for this COVID virus. We haven't seen COVID coming out of airplanes. So he's saying fly, feel comfortable. I get it. He's trying to, you know, spruce up the economy and get Florida moving, because we are, you know, an industrial, growing, hospitality state. And so, you know, I'm for him and his ideas, but be careful, wear a mask, do the sanitizer. We'll probably all get through this. Okay, we are going into Zinnia U. So the 4 questions from last week, we did not have a winner. So I'm going to start announcing the question that everybody consistently misses, and it's about me. So I made the question this week very easy. So last week, everybody who participated got them all right except for the 4th one, and it was about me. And it was, what is Charissa's go-to coffee? And it was either a vanilla latte, coffee with cream or honey, a cold brew, or decaf anything. And I guess this one threw everybody off, but it's coffee with creamer and honey. So I should give you the answer so you can kind of get to know me, but that's it. Most people are always shocked. They would say, she's got to be a latte girl or something, because we know it's not decaf. But hey, if you're watching Facebook Live, you guys are the only ones who know this, but I'm going to tell you a little secret, and it's probably going to gross you out. I don't like creamed coffee. I like powdered creamer. And there's a story behind it. So if you ever come in and see me in my office, you got to ask why. But I've been using powdered creamer for 3 years. I used to never. So it's a funny story. Let's move on, and let's go through our 4 questions. Remember, we're going to ask 4 questions. I'm going to put it up here on the prompter. Answer all 4 of them. And if we have any winners, we have $200 checks going out to your church and or charity of choice. It's got to be a 501c3. We'll mail them to you. Okay, so let's get some questions in here. This should be an easy one, especially if you watched last week's show. So question 1 from Zinnia U last week. What is the average number of bear markets a retiree will face in retirement according to Prudential? Is it A, 3 to 5, B, 1 to 2, C, 10 to 12, or D, 0? So how many bear markets will a retiree face in retirement? Question number 2. From our last Zinnia U, the things to consider around longevity risk when it comes to retirement includes which of the following? A, healthcare costs, B, long-term care costs, C, average lifespan getting longer, or D, all of the above. All right, and number 3 is as always our fun question. I don't know how fun this is, but what popular news network launched June 1st, 2008? This is always our 80s question. Is it, 1980. I think I said something different, but June 1st, 1980. A, Fox, B, NBC, C, CNN, or D, ABC? Okay, this is a tough one. So I had to make number 4 easy. Number 4, this is about Charisse, getting to know me. What TV show was Charisse on in 2004? A, Who Wants to Be a Millionaire? B, Fear Factor? C, Family Feud? D, The Price is Right? So this one should be easy if you know anything about me. This is one of the big ones, because when you come to my office, it's hanging on the wall. Okay, remember, you have till Sunday to answer all these questions. Put all 4 of them in the little typo. You cannot email me them at all. They have to go right here in the Facebook. It's pretty easy to do. All right, we're going to move on, because our main segment here is why you are here. You're here to learn about getting ready for retirement. And we're going to talk about real estate investing, because should you have real estate in your portfolio? Should you be investing in real estate? There's so many options. I heard some have commissions, some have fees. And so I want to go through this pretty thoroughly. I'm going to have a guide on my website one day. We're working on it now. It's not there now. But I do have a little something we can email you if you decide you do want one. But last week we talked about having 4 to 5 paychecks in retirement coming to you from different sources. We want you to be an income wizard. So it's kind of a continuation of that, because should you have a real estate check coming into you with the pros and cons? So let's talk about the first one, rental. You buy a home, let's say you have some cash sitting in the bank and you decide, hey, I'm going to go buy a home, Charisse. What do you think? And so buying a home is great. You have $100,000. You go maybe fix it up for a couple of grand and then you rent it out, right? And now you're a landlord and maybe you're collecting $1,000 a month. After taxes, insurance, and fixing things up, I would consider this possibly a net investment of 5%, right? So that's not a bad deal. And one thing about real estate, it typically keeps going up as long as you hold it long enough. So that's appreciating too. So let's talk about the pros and cons of this. So if you're going to buy homes, you need capital, because if something breaks, you got to be able to fix it, right? Secondly, DIY, do it yourself. People who buy a home and rent it out, what I've, in my experience, noticed is that if you are a handyman or handywoman and you're good at fixing things, then it's probably going to work out for you because you're going to keep more dollars in your pocket. But if you're not, then you got to hire somebody. Then that's where the costs come in. And you have to be very patient when it comes to renters. Okay. You could have, you might expect a $1,000 check every month, and that might be part of your income stream. But what if they leave and you don't have this house rented for 2 to 3 months? You just lost a source of income those 3 months. And how do you get that income if you needed that money in your budget? So again, pros and cons to everything. And here's a nice thing. Many expenses are tax deductible, and any losses can be offset by the gains and other investments. So that's a positive if you have other brokerage accounts or different investments out there. Here are some of the cons. Okay, headache. You're getting a phone call at 12 o'clock at night saying, hey, my toilet broke and it's sprucing out water. Can you help me out? And renters can damage your property. So a lot of people who are listening, you might have experienced that. I've definitely experienced it with renters. And so it's a lot of work. So it's kind of like an encore career if you want it. But we definitely can help guide you and show you, what we know about it, which is important. But if you have the know-how and the experience, it's not a bad idea. Also because of tax purposes, it could bring our tax burden down the road also. All right, let's go to the next one, flipping homes. So we get people who say, I want to buy a home, Charisse, but I just really want to flip it within the next 6 months to 12 months and just, maybe make 20, 30% off the deal. Again, a great thing. And you can't make that kind of interest typically in the stock market unless it's a boom year like we're starting to see right now. So you guys know Chip and Joanne Gaines, they're from television. They know what they're doing. They have all this expertise and they've been doing it for so long. So, people watch the show and they think, oh, we could do it too. And you might be able to, but you got to have some knowledge, number one. You're going to have to take some risks in the meantime. Here's a wonderful thing. When it comes to flipping homes, it's kind of like the stock market. So in the stock market, we have 2 investors. We have the day trader and then we have the buy and hold person. Same thing when it comes to flipping homes. You're going to have the day trader of flipping your real estate because your goal is to flip it every 6 to 7 months and make a gain and go do it over again. But then you get the rental buy and hold where you're just looking for that income check every month. So you have to decide if you're going to go down this route, which one you want. Either one is a pain in the butt. But if you have a love for it, it's something you ever wanted to do, you can make some serious bucks on it. So I'm a big fan of it, just so you all know. All right, so let's move on to the next real estate investment, the most popular real estate investment. It's called a REIT, R-E-I-T, Real Estate Investment Trust, right? So we have real estate investment groups, real estate investment trusts. There's public and private. So I'm going to break them down first. First, we're going to start public and private. Private. There's a lot of you who are probably watching right now and you said, I had a real estate investment, Charisse, and I lost my shorts. And quite frankly, I'm still stuck in it and I can't get out of it. And the REIT promised me a 6% dividend and now I'm only getting a 3.5% dividend. And I still can't sell it. And they keep promising me that we're going to go public, but they still haven't. And when you wanted to get out of it, and you bought it for $10 a share, they said, no, you can't have it for $10 a share, but we'll sell it to you for $4 a share, right? Or $6 a share. So I encourage people, not to go down the private REIT direction. Those are highly commissionable to the agent or advisor that's selling them to you. Somewhere between 7 and 12%, just to put you in there. So if you put $100,000 into a private real estate investment and there was a 10% commission to the advisor, well, your $100,000 when you invest, it's only $90,000. So you're starting out with a lower number. But I will tell you, if you really like having a real estate investment and it's a private company, I would seek out the fiduciary financial advisor. Okay, I'm a fiduciary, I'm a financial advisor. If I were to offer you a REIT, which I can, I am not allowed to get that commission. So you actually get it back in your pocket, which is kind of a positive thing. So remember, there's the broker dealers who aren't fiduciaries most of the time, and then there's the fiduciary financial advisor out there. And so broker dealers can charge commissions. The real boutique firms, fiduciaries cannot charge those commissions. So there you go. But the difference is fee-based versus commission-based. So be very careful with those private REITs. Now, let's talk about public REITs. There's a ton of public REITs. I've put public REITs in our investments before. So you can get an exchange-traded fund public REIT, and you can get a mutual fund public REIT. And that just means it's public. You can get in and out of it when you need to. And so you're going to be partial, owner of the stock or the mutual fund or whatever it is, and you're going to reap the benefits as long as it's going up. And it's just a grouping. Let's just say you get I'm going to pick on one, Fidelity real estate investment, and they might have invested in this fund, a stream of plazas. And so if real estate's going up, that fund's going to go up. But if real estate's going down because brick and mortar is going out, or they can't rent these places, that fund's going to go down. But I do like, if you're going to have real estate and you want to keep it simple and hands off, the exchange traded fund REIT, because there's no commissions, incredibly low fees. And if we need to sell it at 10 o'clock in the morning, we can get that price at 10 o'clock in the morning. If I put you in a mutual fund public REIT and we need to sell it at 10 o'clock in the morning, we don't know what price we get till the end of trade a day, which could be daunting and painful because we could take more losses. So there's pros and cons. Make sure you're working with a financial advisor that actually offers these things, understands these things, and can explain them really well. I got to keep this short because I promised 30 minutes only today so we can get you through this. So we're going to move forward on that. So real estate investment trust also, you can get some write-offs. So the returns you're getting, you're also a shareholder, so you can write off some of this income as well. So that's also a positive thing. Now, there's two more. We're going to do, let's move on to Delaware Statutory Trust. It's a DST. This is one of the ones I'm very much a fan of for a lot of reasons. If you're somebody who lives up, you're a snowbird, you live up north and you're living down south and trying to get rid of this house up north, and you can't get rid of it and you're always having to fix it up, or let's say you're renting it and you don't want to get rid of it because there's no more depreciation. You've had it for 20 to 30 years and you don't want to pay the capital gains to Uncle Sam. This is something that I recommend to a lot of our clients, and it's called a DST. How it works, it's called a 1031 exchange. Not too many advisors do that in this town. Actually, I haven't met one yet. I think might be the only one in, North Central Florida. But we encourage people. So you're not giving 20 and 30% back to Uncle Sam on that property. If you're renting it and you like that income, what you do is you do a 1031 exchange. It's very simple. You sell your property. Let's say you sold it, it's $500,000 total. Well, what happens, instead of paying Uncle Sam, we put it in this 1031 exchange and we move it to another property. So you get to come into our office and we get to pick new property. So we might pick an Amazon building. We might pick a brand new luxury building in Sarasota. The thing is that you're exchanging old property for new property. Now you don't get the phone call of the landlord, hey, my toilet broke, because somebody else is in charge of that. And you're just a shareholder of this property. And let's just say you had $500,000 and you said, Charisse, I really want to put $250,000 in my pocket and I'll pay the capital gains on that, but not the other $250,000. Then you put the other $250,000 and you can buy a couple of buildings with that. So I'm a huge fan of that. I have some clients doing that now. And the whole purpose of that, so you don't pay that capital gains to Uncle Sam. Now, here's pros and cons to these CSTs. The pro is right away, you're going to get a dividend check. somewhere around 4.5% and 5.5%. That's where the numbers are now. It could go up in the future. Right away, every month you're going to get a check to your mailbox. The beauty of it is typically when you own property, you get write-off, right, and depreciation. So about a third of the income you're getting from this property is only taxable. So we're keeping our tax burden down over the time period while we're in retirement too. So it's definitely a great thing to do. You can even put cash in there if you just have cash laying around, which is a great thing. Let me tell you the cons. The cons are this: they're illiquid. You're typically going to keep them 5 to 10 years. But remember, I talk about we wear this tool belt and we have different tools doing different things. We have different paychecks coming at us at different times. So as long as you have all your money in it, it's okay. Here's the other thing is you have to be accredited investor. So you have to have over $1 million of assets somewhere else, and or very high income, depending if you're single or married. So either or would work because, you know, tying your money up for 5 to 10 years, you know, could be costly to you as long as you're getting your dividend. The one thing that I do like about it is that property goes up. You know, we historically have seen that. So if properties are going up and they sell it in 5 or 10 years, not only did you collect the dividend the whole time, but you're going to get a beautiful 1099 because it had growth. And then you pay the taxes on it because they sold the property. Or you can do another 1031 exchange and move it to another property and just do it over and over and over again. It's a really neat thing. They will buy out beneficiaries if you want out. It's not easy, but I said, if you're going to do it, commit to the 5 or 10 years that they're doing it. And then here's the other thing I like. If you pass away and you own a home, let's say it's at $500,000 now, in 10 years, it's worth $1 million. If you pass away, that $1 million growth in that house, your beneficiaries pay 0 taxes on it. So it's a beautiful thing. That's kind of how stocks work. If you have a $10 stock now and it grows $100 and you pass away, your beneficiaries get this thing called a step up, and they don't pay taxes on the growth in these types of investments. That same rule follows inside this DST. So if you have lots of appreciation and then you pass away, your kids don't pay the capital gains at all. So it's a great way to also give a legacy at the same time without a tax burden to your adult children or grandchildren or so on and so forth. So I think we covered that. There's so much. I have a little booklet that I can email you guys. You just have to ask for it on our website. Go to zinniawealth.com and let them know you can type something in there, schedule a conference call for 15 minutes and or just email us. Okay, I have a question that looks like. Can you do a 1031 to buy a Reit? Gosh, you know, you have me stumped because I'm going to say no, but I'm going to have to check on that, honestly. Here's the reason, because I wouldn't do that. I would do 1031 to buy real estate or like a DST. But you know what? I'm actually thinking if you're going to buy a private REIT, not public, you can't do that doing a public REIT, but a private REIT, remember the ones that's highly commissionable, has just failed so many people in history, you probably can. But I highly would not recommend it because of the commissions inside that REIT. Basically, the Delaware Statutory Trust is similar to a REIT, but we pay less taxes. There's so many better options with the capital gains, but I can double check on that. So whoever that is, make sure you email me and I'll get back to you on that one because I have never in history been asked that question. Probably because I never thought of it because I would never want to do that, but there might be a rhyme and a reason. So get back to me on that one. Any other questions, Mikey? All clear. All right. So that's a Delaware Statutory Trust, another way to get income. And so you can sell business rights, you can do commercial buildings, so you can do anything. And especially if you're retiring a business, that might help with taxes. Last but not least, opportunity zones. So opportunity zones is something a little bit newer for people. They've been around, but since the Jobs Act and Tax Cut of 2017, they made them a little bit kinder. But there's still some iffy rules inside of them. So there's some question to them. What it is businesses are encouraged to build up in more impoverished neighborhoods across the United States. If they do that and they put their dollars in there, what happens is they don't have capital gains. So it's a way to delay capital gains maybe you're receiving in the future and totally wash them out. So there's some rules to that. But it's a really neat option. I started learning about them last year, actually the year before, with the local CEP, and we're talking to some other financial advisors. So it could be an option if you're a business owner and you have some massive capital gains in the future, an opportunity to do this. Here's the cons to it. We don't know if that opportunity zone is actually going to make money and how profitable it is. And you can be locked into it for 10 years. So illiquid, hard to tell if it's going to make money. And so there's I'm not as big of a fan. It just depends what we're trying to accomplish. And if you got millions of dollars in capital gains, then yes, we're definitely going to talk about opportunity zones because they're probably one of the better ones, but that's for the wealthy. But the DSTs, I'm a huge fan of. Anybody can do it. I don't care if you're selling a house for $100,000, you can do it. So definitely, you guys, we went over a lot with real estate. There's so much to know. I have so much more to say. We do a Zinnia U class in Gainesville, Ocala, Beverly Hills, soon Orlando here. And we talk in more detail about this kind of stuff. If you have any questions, remember, our job is to educate you. If you're inspired to give us a call to get the second opinion, you know how to get a hold of us at zinniawealth.com. I'm going to finish up because I want to talk to you about an amazing travel deal for traveling and then a local discount. So I don't know if you all heard this, but there's a place called Amelia Island. It is part of basically, you guys know it's over on the Gulf side, right? Not too far from Treasure Island, not too far from Clearwater, but from Gainesville, it's probably a 2.5-hour drive. Ocala, definitely a 2-hour drive. But if you're not getting in planes and going on cruises and that kind of stuff, you definitely might want to take a road trip to here. They have golf courses, luxury resorts, beautiful beaches. And so I have some tips for you if you go there and you're looking for a day trip or a night trip. So they have the island trolley. Anybody likes a good old trolley ride, right? And they basically go through the history of Amelia Island. They have a Palace Saloon where it is the oldest one in the entire, is this state? Yeah, in the entire state. I actually haven't been there. Somebody was telling me about it. So next time I go over there, I'm gonna have to check it out. Sounds pretty cool. And the other thing is they have river tours, cruises, and charters. So I haven't done that. I just usually lay on the beach or something like that. And they do a sunset sail. So they have so much to do. And it's rather affordable, and they have better prices right now, which is good to know. One place that I like is the Salty Pecan Bar and Grill. Basically, I love Mexican food. Everybody knows barbecue is my favorite, but Mexican is too. Well, they have $2 taco night, all you can eat on Tuesdays. So if you're going over there on a Tuesday, go to the Salty Pelican Bar and Grill. It's fantastic. It's by the water. There's live music. And they have a fabulous brunch. So that's a fun place to go to. And also the second place I'd recommend is Joe's 2nd Street Bistro. It's kind of in like a local, really neat neighborhood. And they have fresh seafood. And they're always having some sort of deal on Facebook. So Joe's Seafood Street Bistro might be a very good one to go to. And I think they do 15% off once in a while on all their food. So if you're going to Amelia Island and you haven't been there, but you've heard your friends going, I would go. I will say the resorts are not... they're kind of expensive, but you can shop it at certain times and you can stay the night for reasonable rates. But sometimes right in there on the water can cost a little bit extra. Okay, last one. Deal of the day. We have Labor Day coming around, and what I found, because I'm always looking for new things for the house, is Home Depot. Tools, furniture, plants, grills, appliances. They're having select deals, especially on the appliances, 40% off. Who doesn't need a new refrigerator or a stove? Who needs a matchy match? So that's a great place to go over Labor Day weekend. The other one is Mattress Firm, locally Ocala, Gainesville, across North and Central Florida. They have 50% off their select mattresses. Not a bad deal. And then online, there's Casper. They're offering 15% off their mattresses. So all good deals. We all know Labor Day's coming up here. And just remember, if you're going to shop for anything, this weekend's to do it. Also, thank you all for tuning in today. We talked a lot. Just remember, if you're in your retirement red zone, that 5 to 10 years of retirement, it's time to plan. It's time to put things on paper. If you have a financial advisor that, just doesn't call you, doesn't have an exit strategy, hasn't told you what your income plan is, and you're not feeling confident, you know where to go. ZinniaWealth.com education page. There's a ton of guides. You can download them for free, including our Little Red Book to Retirement on the front page. So again, My job is to educate you, inspire you, and get you to retirement and beyond. Thanks for tuning in. Live by design and not by default. And we'll see you here next Wednesday.
She is a financial planner and advisor.
She's the founder and president of Zinnia Wealth Management. It's also a popular radio show host.
There's a way to have your money in the market and have protected growth.
This holistic approach will help people get to and through retirement.
Absolutely.
You have to change the way that you think. It's not about having these double-digit returns anymore. Things are changing, and you have to have an advisor that's keeping up with the changes.
Your outcome is going to become very desirable if you have some sort of coach helping you along the way.
And our next recipient from the Media and Communications XP, Charisse
Charisse Rivers.
Do not have to risk all your money in the market to survive because it's about the retirement dream.